Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Do apologize about the delay there. Had some technical difficulties, but with that said, I appreciate your patience and we will dig right in. This one is going to be a little bit on the shorter side, but certainly a lot of interesting things happening. As you can see here, banks warn of significant losses as they exit positions with large U.S. hedge fund. Two banks that I've seen so far are Credit Suisse and Nomura. Credit Suisse down 15% following the announcement. Nomura down 16%. Does not sound particularly good. They warn Monday of significant hits to first quarter results. While neither Credit Suisse nor Nomura named the fund, it's been widely reported that Archegos, I'm not sure if I'm pronouncing that correctly just yet. I'm sure I'll learn it soon enough. While at this time it may be premature to quantify the exact size of the loss resulting from this exit, it could be highly significant and material to our first quarter results. Margin calls. That is what really caught my attention, because if we go to the headline that came out on Zero Hedge last night, prime brokers pounded on the margin call shockwave. Again, I was not working in prime brokerage in my time during Wall Street. I think we have someone we can get on to talk to that later. But anytime you have margin calls in something that is as highly levered as today's financial markets, is not an ideal situation. So there you can see that is the news on, we'll dig in a little bit more. But if you look actually at this one, liquidation, bonds, bullion, and big tech stocks all being dumped. So the step to react here is to put on pants, sell everything, and then think. Big tech is getting hammered. Bonds are being dumped. You can see the yield has spiked up again. And I'm sure everybody knows by now that gold and silver have gotten pounded. We'll take a quick look at some of these markets here. A bond market up 3 basis points. U.S. markets, of course, why would they be down? Everything is good to go there. But let's take a look at silver, where things recently got spoofed. And the volume chart looks like you would expect it does, is what it is. At least that's what I've been finding helpful lately is, I'm letting go of CFTC, this and that. I don't know. It became clear in my mind over the last 2 months what the deal is, and is what it is. So I just am going to focus more on just saying, all right, if I know that this is possible and it's probably likely to happen often until it breaks, how do I factor that into my trading? That's what I'll do. I bought some options somewhere around there. So if this rallies back, I bought some shorter term stuff, not legal trading advice, but just, I don't know, my view, don't go and do this at home, but is that, when you see these regularly, if you put on the right option trade 10 times in this situation, I think you'll come out well ahead, even if it only rebounds once or twice. I do think you have a coiled spring effect in here. So certainly it has not, in the past couple of weeks, uncoiled. It's just been further coiled. When that finally goes down, now at below $25 silver at 24.70-ish now. I don't know, you could have the COMEX stay intact, but if you look back at, by the way, if you scroll down below that live chart, I don't know if everybody knows that. I didn't realize that until recently, but you can see 30, 60 day. So here's the 6-month chart. Actually, let's go back a year. So here's after it shot up to 30, and it's been floating around that range. So forget about anything with the COMEX or deliveries, which I believe for gold and, for all of them start tomorrow night. Check that date. I think Tuesday is first notice day. So interesting to see what happens with gold there. But either case, even if you don't have some unusual event or the world notice any of the weird things that are happening that we've been talking about the last couple of weeks, what if silver goes up to $26 just randomly because a lot of people are buying silver? So So that's what I attempt to capture on those trades. This is more a work in progress, learning how to, on a more consistent basis, profitably trade this. I've primarily aimed to capture a big move that has not happened yet. So although I'm just spending more time lately thinking about, again, it doesn't have to be what I want or don't want, at least if I know, if I price in that this is possible or could happen, and everybody else is running a standard normal distribution, and if this continues to happen, then if I do my trading correctly, you can isolate that out. So anyway, silver getting pounded. Another thing to notice here, this came out on, well, this article I saw yesterday, but I believe they were referring to Friday's trading. The banks were ditching 19 billion of stocks, an unprecedented block trade sell-off. I'm assuming it's related to the hedge fund that had problems, but sounds like on Friday they were just selling large chunks. I've never seen anything, never seen something of this magnitude in my 25-year career. Sale was unprecedented. While block trades, when sellers are looking for buyers for large volumes, price sometimes negotiated privately, are common. Scale of Friday's moved raised eyebrows. So I won't attempt to assert that I know. Let's see what this is at the bottom here. The lack of details about the move makes the situation worrisome, as investors don't know whether this was the liquidation of just one fund or more than a fund, or whether it was a fund liquidation to begin with. And the real reason behind it, I don't know those details either, and I won't attempt to make them up, but just keep an eye on it. Wanted to point that out, that that's happening. Before we wrap up, mega ship blocking the Suez Canal does appear to have been freed. So good news there. We'll see what happens next on that one. And lastly, before we wrap up, I'd like to mention I'm wearing my First Majestic shirt today. First Majestic is currently getting pounded, down about 4%, while we have bullion dealers one after another. Not just Andy Schechtman talking about the physical demand. We talk nonstop about the lease rates, the increased premiums, all the other signs, the deliveries, the metal coming off the COMEX. So again, I'm not going to give anyone licensed financial advice on First Majestic, but I don't know, if something gets pounded for reasons that are going to be reversed, then certainly it would be a day to consider looking at stocks like First Majestic, shall we say. But in either case, I guess it's the fun of the markets. It all comes down to how we react and interact with these events. We'll see what happens with silver, but in either case, this situation with margin calls, prime brokerage, and a whole lot of things happening in the world, we'll keep an eye on it, but just wanted to let you know that that was there. And we will see which day it is when the silver market finally notices and checks in with reality. But for now, gonna wrap up. We'll have probably a couple more clips today, and who knows what will happen. So thanks again for being here. Hope your week is off to a great start, and I'll see you again soon.